Well, let's switch focus away from equities into the commodity complex. Pete McGuire, of course, Chief Economist and Market Strategist at NG Farah. Pete, warm welcome to you. Significant sort of, I suppose, not so much parable, but link between what BOJ's actions yesterday meant for commodity prices, particularly in the gold space, which is being subject to some other headwinds as well.
Absolutely.
How do you read the pass-through?
Good morning, Brooke, and good morning, Carson. Well, also, you've got to consider what India came out and they've jacked up tax there as far as gold imports by 50%, from 4 to 6%. So that will certainly impact as far as demand, but there could be further, when it comes to smuggling and the black market, you may see a move to that side of it because they're an industrious lot, and when you think about gold imports, you're not importing tons of the stuff, just in the sense of ounces or tens of ounces. So you may see further movements there. But the Bank of Japan, I mean, when you think about what's happening with the yen versus the euro, about a 25% move in the previous 6 or 7 months, it's been dramatic. And our dollar, I think it's running at around about 94 and nearly 95 yen. So, there's no doubt that Japan was very much hampered in the old days. I remember back in 85 when it was running at about 242 against the dollar. And it went all the way to 80, so it certainly impacted the Japanese economy significantly.
I saw some technical analysis showing on the gold price, though, it failed to close above resistance at the 50-day moving average, so at 1690 as well as at 1700. So even despite all that stimulus, the race to the bottom for currencies, you still can't get the gold price really breaking out. Why?
Yeah, well, I just think that probably a lot of the smart money's gone to currency trading, and it's continuing. And of course, there's only so much in the sense of firepower out there, Brooke, and a lot of it's certainly found a home as far as equities over the last month and a half. And I think that the equity move to the upside has been very strong, considering where the S&P is now. Massive move up from 1350 to 1470, 1490 range in probably the last 6 or so weeks, and it'll take a little bit of breather probably in the next couple of months, and I wouldn't be surprised to see a further move on gold then.
Interesting, we get our inflation read today. We don't get necessarily, though, the focus on a lot of those real costs in the economy, like, the spend in the supermarket. That's not what the Reserve Bank focuses on, but wheat is rising. That can only mean bread prices going up.
Well, that's exactly right, and that'll have an impact as far as all consumption of the betterment of foods, and when you think about that, it's probably also to corn and soy. So I think that you're going to see it continue. We've had 6 of the last 7 sessions has been up on Chicago as far as wheat, and I think that will probably continue very much into this week and certainly into next week. So there is just impacts there as far as pricing, and it's considerably much higher than where we were, going back a couple of years back.
Let's understand as well, when it comes to one of those other sort of Dr. Copper trends here, because you've got BHP's production numbers in that space, they're starting to get back into play on the copper story.
Yes.
More broadly, is the market saying that the demand is likely to be locked in for 2013? What are you seeing out of China?
Well, it's been very, very strong, and December's figures really rocked everyone. They were very, very solid. And what you're going to see is further, demand coming, but also China has got such a huge appetite. The numbers are really hitting the ball out of the park, and that really quite surprised a lot of analysts. The copper price at the moment in that 8,000 range, a metric tonne, I think that you're going to see further upside for that particular metal, and it's just, I think underpins the whole commodity complex and the whole story. I don't really see it, having too much of a downturn in the next couple of months.
Are you thinking still staying in trading ranges, though, or some kind of breakout?
I don't know whether you'll see necessarily a breakout, Brooke, but certainly within this band, that 8 to 8.5, say 8,700, it could be a fairly tight, really a band, and it's probably too speculative to say we're going to see much higher prices than that. I think some impact has got to be put into the value of the US dollar as well, as far as the value of the dollar, and I think that that's probably where it'll trade in the short to medium.
You think stronger dollar puts a cap on the gains?
Stronger dollar always does, but I don't necessarily think you're going to see too much stronger. It's going to be what's going to be fascinating is going to be roll that across to the currency wars. Look what happened to the British pound in the last, say, 6 to 10 weeks. Have a look at what's happened as far as the yen appreciation, and I think that it's going to be at 13. I thought it had happened in 12. But who would have thought that the value of the euro would be sitting at that 133 to 135 band when everyone was saying how it was savaged as far as internally, domestic consumption and production numbers and an unemployment. We would have thought the euro would be probably closer to 125 than 135, and that's very interesting from that side of it.
All right, so yeah, Governor Mervyn King was talking about, if anything, the rising resulting tensions from that race to the bottom globally by central banks. Let's talk nat gas.
Just as we get the South Korean finance minister, as we're speaking, saying the speed of the won appreciation is the issue right now. So obviously, even now South Korea kind of weighing in, just even as we speak. They're continuing efforts to minimise the won volatility.
Well, Brooke, I think 13. We thought it would be 12 as far as currency wars, but 13 I think will be a very hot topic. And I think the FX play for the first 6 months of the year is going to be massive. And have a look where Japan's whole sentiment is at the moment. They've only got one agenda, and that is to reinflate asset prices. They've seen what 20 years of deflation has done, and the only course of action is to keep on pumping and stimulating, and that will underpin gold.
Is it getting into the real economy? This is the question. Or is it simply being used to buy bonds and distort that market and create a bubble?
Yeah, well, it's difficult to when you drill down as far as the unemployment numbers, and certainly Japan is a powerhouse in its own right, but it certainly doesn't deserve to have a currency as strong. And the only way for it to compete is to have a weaker currency, and that's the whole agenda. And any currency that moves, the accord in '85, as I mentioned, was 242 yen to the dollar. I remember it distinctly, and then it went down to 80. So, the Japanese have got one agenda, and that is above 100 in the short to medium term versus the US dollar.
Massive debts. You just wonder whether this whole kind of cycle of banks printing money, lending to banks that lend back to governments to cover their debt does us any good in the long term.
You and I will be old men, and Brooke will still be as young as ever, but we'll be old men
probably
still
lots
thinking...
of Botox or something.
Yeah, still worrying about the value of the government stimulus. That will just continue.
We'll see you next week to continue the discussion.
Thank you, Carson. Thank you, Brooke.
Chief Economist, Market Strategist, NG Farah.
Business leaders and heads of state have arrived in the Swiss resort town of Davos.